Matthew, I'll start with you. Nigeria, a massive country, rich with resources. Does it attract the foreign investors that it should be attracting, given the size of that country?
Well, we have to unpack which foreign investors we want to attract into the Nigeria market. If you look at FDI inflows, they're certainly higher in Nigeria than in our own country. So the banking sector is starting to attract foreign direct investment. A lot of that is the inflow into oil, unfortunately, so the diversification needs to take place. But we are seeing that the banks are playing their role. There's lots of reforms coming down the line. There's current reforms in the process at the moment. And I think the question is will the banks be able to service this diversification for these FDI inflows to take place?
Doug, to what extent is this about investor perceptions of Nigeria? Because they have been changing. Have they been changing enough, though, to really instill confidence that you'd want?
Yeah, absolutely. Look, there's a big halo effect around the Nigerian reputation globally. Of course, the work that has been done amongst the banks in the last 10 years with a lot of amalgamation, the way the banks have changed their offering to market, the way they present themselves to market, is maturing very fast. These banks, from a local consumer point of view, are really getting a good reputation, which is surprising from an external viewpoint. But locally, the banks are doing well, and they certainly have the ability, if you like, from a reputational point of view going forward, to challenge even some of the South African banks.
Are any of these reforms seen as window dressing at all?
I think there was some questions in the seminar series last night. Is this hollow corporate governance? Is this just signalling to the international market? I think there's a bit of yes or no in that. I think the reforms have come. I think you've got to put it in context. I think a lot of people in the audience yesterday came from a Western business model mindset. If you go into the Nigerian market and you work there for a number of years, you realize that the reforms actually are coming on leaps and bounds. They will be implementing, hopefully, Basel 2 and 2.5 effectively by the middle of 2012. And that's not signaling to the marketplace. If you want to become accredited to Basel, you actually have to put a lot of effort in for that.
Doug, do you think South African investors, or South African banks rather, see something different in Nigeria than investors from outside of Africa might see because we understand it differently?
I think we understand it better. The Nigerian economy is very different. It's a very big economy. What we would normally regard as our perceptions of the Nigerian banks, for an example, is often quite skewed. When you're in Nigeria, these banks have a lot of heritage. Some of them have been around for a long time. They've created some great relationships. They are very, from a consumer point of view in Nigeria, very loyal to their banks. So for South African banks, for an example, to enter those markets is quite tough still. And we've seen it with some of the banks, Standard Bank and others that have got in there. It's not an easy ride. There's tremendous competition there. And just backing what was said right now, these banks have realized that they need to get beyond advertising and just pushing a message out there to actually doing.
And are we seeing them doing?
Oh, hell yes. This is definitely coming along. The banks are changing their branch infrastructure, spreading. The amalgamation has forced some unhappy marriages, but the banks are fast looking at exactly what they do and less about what they just say to the general public.
Is there any point in forcing an unhappy marriage, though, Matthew, because the end result's not going to be a good one, is it?
Well, I think around the consolidation, it's a tricky one. We've seen the banks consolidating. In 1980, there was, between 1980 and 2004, there was over 100 banks in Nigeria. And in 1980, it got whittled down to 26. Now it's gone from 25 to 24 and possibly 23 going forward. This consolidation is not easy. People say the consolidation occurred a lot because of the Western or global financial crisis. I think it was probably more to do with mismanagement and speculation, over-leveraging. And I think what's important is AMCON, it's the Asset Management Corporation of Nigeria, has got a very tough task formulated in 2010 to carve out those toxic assets from those banks that have been consolidated. How they dispose of those assets will really be the winner or the loser in terms of how successful the consolidation is going forward of these banks.
Are you seeing this as part of a broader reform of the entire Nigerian economy?
Look, the Nigerian economy has gone through significant change. We're seeing it as the challenging economy, if you like, for Africa. There's great business in Nigeria, the likes of the Dangote Group and many others, that are world-class businesses in any right. So the perception of Nigeria as being just this corrupt center of Africa is fast changing. And I think a lot of work done by government, done by Governor Sanusi in particular, they're miles from the end game. But certainly it's moving in the right direction very, very quickly.
Are there any concerns that Sanusi and also the head of AMCON and the SEC might not enjoy the same support under a new administration?
I think there's always those risks. There's really three front runners, but I think good luck Jonathan is the senior, is the forward one. I think some of the discussions last night were revolving around the business and political community all know each other, so it's not a question of the regulations and the law not being there, it's a question of enforcement of this law. But I think that in terms of international investors, we look at the FDI flows, we look at brick trade, Brazil, Russia, India, China. Brick trade with Nigeria has gone from, in 1998, I believe it was about 3 billion US. It's gone now 12 years later to over 35 billion US. So the BRIC countries are really getting this Nigeria story, and that means that Nigeria has to actually kind of clean up its act, which it is in the process of doing.
Are we also seeing a perception changing of Nigeria as really being an oil-based economy?
Look, largely, I think the financial side still sits in that particular bucket. But of course, you've seen the telecommunications businesses, no surprise across Africa, MTN in particular, doing very well in that market, Glo doing the same. There is obviously a big production capability in the market. There's a lot of farming, agriculture that's picking up right now. But the primary link, if you like, to reputation for Nigeria has, of course, been oil and banking.
What are some of the concerns that were perhaps raised by people at the seminar last night?
I think challenges around doing business in Nigeria. I think that was one of the concerns. There was a number of people in the audience that have businesses up there or business concerns. And I think, interestingly, it has a worse reputation than some of the BRIC economies. If you look at their ease of doing business, I think they're sitting at about 137. The DRC is sitting at 175. But if you look at India and Russia and Brazil, they're sitting at the 130 mark. So the perception is a little bit out. I think doing business in Nigeria is tough. You've got to keep your eyes wide open. But the fly-in, fly-out strategy does not work. You have to be on the ground. You have to semi-localize or fully localize into the marketplace. And I think that's the trick. A lot of people think that it's a greenfield site where they can get a lot of return without doing much kind of on the ground work. And I think that's where it stems to. In terms of the economic diversification, one of the questions raised was, should the economy diversify and then banking support, or should banking drive that diversification? Because at the moment the question is, does the banking sector actually have the ability to supply that diversification away from oil into agri and financial services, etc.?
And what's your view on that?
I think that it's a bit of both. I think the banking sector has to play a spearhead role in diversifying the economy. It has to move away from oil. We see that commodity-dependent economies need to get a trickle-down economy effect. FMCG has played a large role that was discussed earlier, I think, in the program. But beyond that, we need productive and strong competitive companies and businesses to grow under that sector of beneficiation from oil. And I think the banks can play a fundamental role in supplying that infrastructure and foundation to do that in.
And Doug, is it the will within government to help drive some of these reforms and also to cut some of the red tape and to make it a more investor-friendly destination?
Look, it's always an ideal thing. Excuse me, the Nigerian economy has gone through a process also of having a look at repositioning themselves as a destination for FDI and, weirdly enough, for tourism. Clearly, when governments get involved in helping position a country to attract FDI, it can be complicated, but you do need the government support. Ultimately, your country's reputation sits in the hand of government, and we see the same challenges here. And how they behave and how they facilitate entry for new players into the market, of course, will drive the reputation of the country and invite FDI.
Do you think there's the will there to do this?
Absolutely. I think that there's definitely been renewed confidence in the region. Anybody who's spent time up there over the past 5-10 years will realize that the sentiment in Nigeria has changed. They get the global picture. They're eyeing out South Africa. They want to be number one in the continent. And I think we're going to see them move from strength to strength over the next 10-12 years.